Yes, it's most fucking Mayfair. The video that everyone's been wanting and asking for, how we are closing $90,000 days using MIG Liquidity Edge. We'll break down the confluences, we'll break down the time of day, we'll break down the full understanding for our grading system that we've just recently implemented. First thing psychology-wise is, you as a trader, your job isn't to try to identify trades which have the highest likelihood of hitting take profit. Your job as a trader is identifying trades that reduce the amount of risk in the market. So what I mean by that is, you take every stage of confluence as a percentage breakdown. Liquidity Edge provides you that 50% confluence. And then let's take your imbalances, your footprint models, let's slap an absorption on Orderflow, let's take our volume profiles, etc. But the point being is, you want to find setups which reduce the amount of risk of you participating in the market. And when you start looking at positions like that, it makes life a lot easier. Okie doke. First things first, market opens or in pre-market. What I like to do is go over to a 2 or 3 minute time frame, see exactly where I am. I expect a bullish push. First stage of confluence is structure in the market. Okay, so here I can see strong rivets of consolidation. That's number one. Okay, yes, our liquidity zone prints. Liquidity is a trampoline. That tells us where price was filled or wants to be filled. Okay, that's liquidity. Volatility is different. Volatility is the momentum in the market, and that's where majority of these retail traders get wrong or get twisted. So we're looking at this mentally from a grade point perspective. This is a stronger zone for us. The confirmations for those zones will not be released. They're completely proprietary, but the way we've broken them down is there's 12 forms of confirmation broken down into 3 grades, three categories of 4, sorry. We were going to change that into a numbered graded system. However, when you have these small nuances whereby you might get an A plus B in comparison to an A plus BB, they are still considered in an A plus setup overall. So I like to find the smallest areas of interest that have been created with the largest amount of volume. Think about it from a density perspective, but remember, volume trumps everything. The amount of people within that control area is far more important. So first thing I'm looking at here is a possible bullish. We've tried to attack it 1, 2, 3, 4 times in that pre-market to New York. So I'm just waiting. There's nothing clear for me here. Really nice consolidation. When I go down to a 1 minute, I can see that consolidation layers off here. Now, if I'm feeling aggressive, I don't really give a shit about the graded system because my confluence is already 70-80%. Location's great. I have really nice consolidation here. We have a wicked entry here, which shows us absorption. The most conservative and the best entry would be on this block. Firstly, we've got an A plus setup here. So our confirmations for that specific liquidity area is far stronger. If you have the new update, it's a 15 cc at the bottom. So this would be the higher time frame liquidity area, which layers on top as well. If we look back, this would have been my first entry, and let's see how this pans out. Just missed, but we can see a really clear example of how it touched back down to this liquidity and then pumped higher. Go over to a 2 minute to see if anything was formed. Nothing. This entry we would have missed. It's an entry I wouldn't have taken specifically. So I'm really looking at that 9:15 to 11:30. Best liquidity areas are the ones that are created in this time. Reason being is because we have the most amount of volume within the market, that initial push, that strength of volatility. And we want to see, as I said, these areas are like trampolines. When you come back down, as that fat bitch is bouncing, she'll bounce back up. Or she'll fall, depending on the strength of the trampoline. Okay, so at this point, we were looking for these areas here. Now, there's a layer. Okay, we have 2 fantastic areas up top, both very similar in volume. And then we have this area, which is layered and stacked with a 15 minute. So what do we do with that? Firstly, I'll head over to the 15 minute. Okay, and I'll see what does this actually correspond to. So really nice touch here. So we've already tested this higher time frame area. Just a note for consciousness. Now I'm looking realistically at which previous day highs, which sessions, which areas of interest are now coinciding with that, providing that confluence. So here we have a previous high New York session, which was on Thursday from the week before, and we'll change this to red. We have this wicked area here. It's also at a really nice rounded number. NQ likes to work very well, especially in futures, work very well with mental whole round numbers. So 800 is a great point of interest for me as well. And then I like to see where are the actual wicked areas within that area. So where are the wicked candles within this selling area? So we have one here and we have one here. Okay. Our job isn't to predict the market, it is to react. What that means is, just because I think that there's liquidity areas at the top ready to be grabbed, I'm not buying into that. Okay, that would be stupid of me. So what I instead do is I create the narrative. If price starts pushing with forces of volatility, strong bullish candles into this area, and I don't see it slowing down, I will wait to see whether or not it will push and break. And then I can say to myself, okay, if it gets past 800, 805, 810 with a 10-point mental stop loss, then my next point of entry will be that 840 to 850. And that is how I break down which areas are stronger. So now we've got those. Go down to my 1 minute. And that 840 to 850 is a lovely overlap. Now what I'm looking at is I will take an aggressive entry on this 15-minute block. If I look left, remember, it should also be on that wick. So this was for Friday's previous high. I also know that Friday has already tested that same area. So then I'll go for the next previous high, which will be here. Okay. Conservative entry will be my 840, 850. Aggressive entry will be my 800. We'll ignore pause. Seems to be that midday whilst we were waiting for this, our buy entry kicked in very nicely. Well, there's a great example. Nonetheless, see if we can break up higher into this. Again, like I said, every zone is valid. Okay, it's just for those that wish to have a further form of confirmation, a more conservative form of entry. We've backtested around 8 out of 10 A+ setups are profitable. It was actually 9, but I'll be conservative and say 8. So, but if we were taking a position like this, let's say this CCB, 15k entry, I know that this sell area here that was formed on the way down to retest this was far stronger, which tells me that the bears are in control. Also produced a lower high from our last push at around 1018. But if I wanted to, it's very easy for me to place a limit here, 50% of the area, and take 20 points. 20 points and walk. There's no point trying to get 200 points at a time. I'd rather take 20 points 10 times and walk away. As simple as that. Conservative entry at 50% of the zone, aggressive entry at the top of the zone. Anyway, let's see how this panned out for the rest of the day. If this area is breaking, if this breaks through here, I don't really expect a third touch, so to say. I'm pretty sure the most you can get done, most you can get touched is twice before there's an issue. Pause. See how this pans out. There's our A+, sell. Very nice. It took around 2 hours to come back, touch that level. 2 hours also tells me that momentum isn't strong enough for it to have already tried to retest, which tells me that when it gets back to that area, if volume has shot down over the day, that lunchtime period will adhere to it nicely. Again, with an area like this, fantastic. I was just about to place in a buy before I place next. Reason being is because, as you can see here, really nice levels of consolidation. These absorption wicks here at the bottom, long wick, long wick, long wick. If I wanted to be aggressive, I could have placed an entry here, placed an entry here, and placed an entry here. Okay, this would have been my entries. I can't be asked to change them green. And once again, on that first entry, let's just look for our 20 points and walk. There we go, 20 points. If I want to put a nice tight 2 points, if I really fancy it, do that. If that hits stop loss, play it again. If that hits stop loss, play it again. I lost 2, 4. If it drew down, 2, 4, and then took that 1 to 10 afterwards. Okay, I'm hoping that's making sense. Now, in regards to how to use volume profile, I'll show you very quickly. Go over to my 5-minute restart. Refresh this now. Volume profile. I like to take that pre-session first. So let's say I was trading, where's 9:30 here? So I'll take the overnight. Firstly, I'll take overnight. I'll then take my previous day. And all I'm looking for is where our main POCs are. Okay, this is here. POC lines up really nicely here on that 5-minute. And then also I can see, let me delete this. I can also see that over here there are high volume nodes which dictate to me areas where price should relatively slow down. You can see, look, high volume node, slow down, high volume nodes, consolidate, high volume node, consolidate. These areas here we call low volume nodes. These low volume nodes will transact in a way in which they will either bounce and immediately retrace, or they will bounce and completely collapse through. Okay, and we can see that at this low volume node, bounced wick. We can see here completely slashed through, came back wicked. And then let's say here, came back wicked. Prior to that, completely pumped all the way through. I'm going to delete all of these drawings. Okay, and with high volume nodes, we see them as areas whereby we expect, because they're the most volume, the most amount of consolidation, the most amount of ranges being made. Now, whether or not it bounces into that and creates that range, or bounces over that and creates that range, is up to us to be able to identify in the market. Okay, so all I know is I'm going in. It's 5 minutes we've already tested. We've got 15 minutes up here, but it is realistically 200 points away. It's not a high volume day that we anticipate because there isn't much red folded news on this specific day. That's the easiest way to look at it. If we look at where price is at the moment, price currently absolute falling knife, really nice 5 minute area of consolidation. If I go and place my volume profile, and now all I'm looking for is these low areas, these low volume nodes in between the gaps. And this is a really nice example. Strong low volume node here and bounced in, wicked up. And it's also a very good mental area, 25,100. You could have taken 10 points, moved break even, and gone straight into profit. What I'm looking for now, realistically, is 1 minute breakdown, remove everything here. 1 minute breakdown, looking left, really nice point of interest here, but it was a V recovery, so this would be my next area where I can see that consolidation. If that fails, I'm going here, go to my 5 minute, and see this is... Now, does this coincide with any specific price levels? I'll take this wick, and I'll take this wick here. Okay, pop over to the 15 minute just to have a look overall. Obviously, if we're feeling nice, we can get this session low. If not, 15 minute wicks are normally really nice to me, so this 15 minute wick here would be fantastic to see. This, I'll take 50% aggressively and take the next one here. It's literally as easy as that. Fuck it, I'll take a sell up here as well.